this is just me. There's no in between. So this
is just me.
Is just me.
Why there is no in between.
So
this ain't my scene, I'll beg my leave. My face ain't clean, this is just me. Some ways I lean, escaping green. I state my dream, not in between. This ain't my scene, I'll beg my leave. My face ain't clean, this is just me. Some ways I lean, escaping green. No in between.
This is just me. I sound, a style, a groove, a rhythm. No in between. I know you have to say what you're giving. I'll move on, yeah, I'll move on. 1 minute, then I'm gone. I'm gone. So this is just me. It's a sound, it's a style, it's a groove, it's a rhythm. No in between. I know you have to say what you're giving. I'll move on, yeah, I'll move on. 1 minute, then I'm 1 minute, then I'm
Right. Hi, Facebook fans. Oh my goodness, it is so amazing to be here with you guys today. And today we have an absolutely amazing treat for you. So on the panel today, we're going to be discussing how to raise cash cows in 2021 for your business. So if you're an entrepreneur right now, cash flow is something that could be really under pressure. I mean, cash is king in business, no matter where you're at and where the economy is at, right? So we have our financial expert from the tribe to talk to you about all the different aspects. And I'm going to introduce him to you now. So we have the one and only absolutely amazing business coach, Linda Date. Hi, Linda. Then we have the absolutely incredible Tzippy, chartered accountant and registered auditor from Howard Joel & Company. Hi, Tzippy. And then we have the incredible financial manager, Dr. Meiya, financial management coach. Hi, Meiya. Awesome. I am so psyched to get this going, guys. Just for you guys in the background, do you have any idea how hard it was to source all of these financial professionals at the same time? It is incredibly difficult to get people in finance to collaborate like this on a panel, but we're so excited. Peter made it happen for us, so thank you, Peter. On my right also I have the amazing Karen Freer from Fascinating 7. And so Karen and Peter are going to help me just guide the panel discussion today. But on that note, let's jump straight into it, shall we? So I would like to know, and maybe Tzippy, if you can start us off on this, but feel free to pull in your fellow panel members as you see fit. What is the financial outlook right now? How's the economy looking? Where are the pitfalls? Are there certain industries that are more under pressure, less under pressure? Just take us through, how does the economic environment look for our entrepreneurs right now?
Sure. Thanks, Dixtine. Let's throw me in the deep end, shall we?
Only a pleasure.
Okay, so I'm not an economist, so I'm not going to be giving an economy view, an economic view, an economic outlook. That I can't do. I can tell you based on my experience with my clients, where things are. Some are okay, some are not okay. Sure. I'm actually going to be asking Linda and the good doctor to cut in over here. But before I do, I'm just going to say, you know, COVID gave an opportunity to a lot of people. A lot of businesses were able to pivot and were able to find something new to do in the new economy, in the new climate. A lot of businesses were not able to. So I think that, you know, to say it's doing brilliantly, that's a lie. To say that it's doing absolutely terribly, I think that's a lie too. We've obviously got what the economists are saying, which is on a very global, big business view. I don't see those big businesses in my practice. So what's happening with them is not really happening with the smaller entrepreneurs. There are some who've done really, really well. There are some who've unfortunately had to close their doors. But yeah, I think that for those people who are versatile, who are flexible, the economy is okay. The Rand has done amazingly. You know, so for people who are looking to import, for example, because that's the key word these days, masks and sanitizers from other countries, they're paying less than they were paying 2 years ago, because the Rand has done so much better. So yes, that's all I can say at the moment, because I'm not an economist and I don't unfortunately follow all the economics of that. So I'm going to see if Linda or the doctor can give any more insights into that.
Fantastic. Thank you so much, Tzippy. I really enjoyed that. Linda, can we come to you? Do you have anything to add to that? Can you break it down for us maybe a little bit more?
Yeah, this is like a hot potato, isn't it? I'm also not an economist. In fact, when I did the economics in my sort of high school days, I ended up getting a D, I think, or an E for it, which is just a little better than the math, which I didn't do very well. Anyway,
well, thanks for telling me on the live show. This is what it's all about, right?
Yeah, but I think yeah, E for economics. Thanks, Stephen. I did get better at it as a banker, obviously, and just to introduce myself from that perspective, I am a business coach, but I spent 35 years in the financial industry, banking in particular, for both Standard Bank and Nedbank. And in that time, obviously, I was working with financial directors of large listed companies, multinationals. So it's a very different perspective that I had in those days from what I have now, which is the same as Tzippy, dealing with smaller businesses and entrepreneurs. But I think there are some lessons that we can learn and bring along. So I'm also going to admit something else on air live, is that I don't really follow the news anymore. I don't really follow what's happening to the Rand or the economy or the interest rates or any of those things, because I did those for 35 years. And at the time it was relevant. I don't personally believe it's entirely relevant. I'm not going to say at all, but entirely relevant to the success of a small business. I think the future of this country and the world is small business and not big corporate. And so why should we follow the patterns of the past when we can generate a whole new path of our own? Having said that, and we'll come to it later, I'll give Dr. Meiya a chance right now. There are absolutely tools and techniques that we can choose as entrepreneurs to use and follow that will improve our ability to generate those cash flows that we're talking about today.
Awesome. Thank you. Thank you, Linda. I love that statement, by the way. We don't follow patterns, we make our own futures. That's beautiful. Dr. Meiya, I'm keen to hear from your side. What's your take on the economic climate right now?
Look, as far as the economy is concerned, colleagues, I'm joining my colleagues. I'm not an economist, but let's just dissect what has happened in the past 12 months. we have industries and companies that have gone down and that are going to continue to decline, as a matter of fact. But equally important, we've had industries that are growing, and we've got industries that are emerging from this crisis. For an example, let's go to the obvious things. If I told you last year, this time of the year, that the business of face masks will be booming, you will not have believed me, isn't it? But when you look at such a simple business like face mask, it's booming, all right? But for colleagues around the table, the pandemic has brought to us an ability to do away with high fixed cost of office-based organizations. So any online-based and or online run institution is going to boom and is going to continue to boom. So at this point in time, that's what I would like to put. Even when you look at the minerals, for example, I don't know how many of you are into precious metals and things like that and cryptocurrency. Moving forward, these are the industries that are showing a potential to increase and the potential to grow. But lastly, to add to that, the beauty of the crisis that we have is that the increased unemployment rate is going to be a booster for small businesses to emerge and for small business to continue to grow, those that are already in operation.
Those are some very good points. Thank you so much. I mean, really good points. I think the fact that fixed costs has basically become null and void due to we not needing office space anymore is an amazing point. And then the fact that because of unemployment, it's kind of everything has a chance to shift, right? It's like we're almost going through a complete restructuring phase. So thank you for pointing that out, Meiya. So next up, what I like to hear from all of you is literally just lay it on me, your best tips for entrepreneurs on how to manage their cash flow right now. So how do we create those cash cows and how do we raise them? How do we nurture them so that they can support us, our family, our friends, and our communities? So I'm going to ask Linda to speak first, but I'm going to want to hear this from all of our panelists, please.
Right. Step one, know your numbers. I've said it before, I'm going to say it every time to every entrepreneur that I come across. Know your numbers. What I mean by that, very simply, is you need to know how much money is coming into your business every month, every week, every day. And where is it coming from? Second, you need to keep track of where your money is going. Who are you paying? What are you paying for? And is that payment giving you the returns that you're looking for? And then, of course, revenue minus expenses, very simple math, guys, equals profit or loss. So if it's negative, it's a loss. Now, second tip is to separate your personal expenses from your business expenses. So I've often shared this story as well to say, at first, even when I started my business, it was a little confusing. I had everything, all entries going through one bank account. And then very shortly, I realized you need to separate these things out. And I opened a second bank account. And that second bank account is called Just Ask Linda. It's a business account. My first account is Linda, the person, and her personal day-to-day expenses, household rent, shoes, you know, hairdos, whatever, socials with my family. Those are my personal expenses, and they should not be mixed and matched with the business expenses. On the business side, you have two aspects, which I'm sure some of my colleagues will add to this. I keep it very simple, guys. They can make it like more fancy, I'm sure. But simply in the business side, you have you, the business owner, and you, the business investor. Typically, you end up funding any shortfall you have in that business account with your own private savings, with income from something else on the side, or from your pension fund, or from your retirement or pension, or I'm thinking of retrenchment. You know, that's quite apt in the last year. Some people have got retrenchment packages, but everyone puts it all in one ball, and 6 months, maybe if you're lucky, 12 months later, there's nothing left, and there's a big overdraft of several $100,000 rand, or dollars, or pounds, or euros. So know your numbers, guys. Would one of my colleagues like to add a little bit of context to that? Tzippy, go first.
Yes, I would like to. Thank you. First of all, you make me laugh that your shoes go for private. Definitely.
Yeah, can I just say, like, some shoes, can you claim them for tax deduction, Tzippy?
No, unless you are working in a mine and those are hard toe shoes and you can't, and those are what you need for your work. Linda, you've given excellent, valuable advice. Absolutely, separate your business from your personal. It's something I tell my clients all the time, and it's difficult. I know that it's difficult, but you know, even if you're doing transfers all the time from one account to the other account in order to be able to use your personal credit card, I as your accountant, or so-and-so, whoever, as your bookkeeper, doesn't want to know every time you go to the hairdresser, doesn't want to know every time you go to your psychologist, doesn't want to know every time you go, I don't know, to have your nails done, you know. So it's just, and having to go through that, it's much better to say these are for drawings, and then your drawings, or your salary, or however you want to call it, is your personal stuff. You know, I know that I'm privy as an accountant, and I'm sure that all accountants on this call can agree to lots of information that normally you'd tell your psychologists and psychiatrists as well, or your spouse, or whatever else. However, your business, when you have somebody else going through those business books, and inevitably it's going to happen at some point in your life, you don't need that stuff being part and parcel of the information that's given to the tax authorities, to somebody doing a due diligence because they're buying your business, all that kind of stuff. They don't need to know. The other thing that I want to actually mention is something that has become very, very important and dear to my heart, is when working out your cash flow, don't make business decisions based on tax rules and regulations. If you need to go and buy a car, and for some reason, and I'm talking about a car for the business, okay? Yes, definitely. Am I going, if I need to get a cab, a bakkie, and I need to pay that, am I going to be getting a double cab or a single cab? Don't go and get a single cab because you're going to get the VAT back on it, rather than a double cab because you actually need something to safely transport some of your workers to wherever it is that you're going to. The business decision is the double cab. We'll deal with the fact that you can't get the VAT back. You know, that's a business decision. When you are working out how much you can take out of your income every month, bear in mind that some of that income is going to be put aside for tax. Make tax an expense. I know, Linda. Make tax an expense in your business so that you can provide for it, so that if you've had a very good year, which I'm hoping that everybody listening to is having a very good year, and you're going to suddenly have to pay tax, suddenly you don't want to go and ask the bank for a loan because you haven't provided for it. Something that I tell all my clients, I have one client who listens to me, is open a call account. Put that tax every month into that call account so that it's not readily available for other business day-to-day expenses. Those are very, very important. When you're doing cash flow budgeting, make sure you have a proper budget, whether you need to look back in the last 3-4 months or even in the last 12 months to see. January is often a very difficult month. Go back and look at last January. See, what did I spend last January? Am I going to be spending those things? Am I going to be spending those things again this January? I got caught in this one this year, because I'm a parent, and I've got lots. January for me is a very expensive month, having to get new uniforms for my kids. They always have a growth spurt in December, having to get new school books. I'm not that parent who goes in October and buys all the school books and has them all happily packed. You know, I'm using a personal example to show you how in business we've got to deal with these things. Rent normally goes up in January. You know, bear that in mind. So when doing a budget, look at your last bank account in January from the previous year and see how that works. See how you're going to take that knowledge and provide for it.
When you talk of cash cows, and let's leave finance and accounting for a little bit, let's go to an area of marketing and strategy. Cash cows, technically speaking, are driven from understanding your customer. It's a customer-centric approach to business. And while product-centric, it's a necessary in the sense that the cash cow, by its definition, presupposes that there is no need to reinvent the wheel, all right? You don't need to reinvent the wheel. There is a product and or service that is already working. It's just not growing, but it's churning cash. So put it differently, if we are not yet already in the industries that are churning cash, let's get ourselves on those industries that are making money. First one, and what I'll do, I'll probably share this with you, Nestine. It's in an Excel. I'll make it in a PowerPoint and share with guys to have a look. The first one is your return on sales. As a matter of fact, your return on revenue or sales should not give you anything less than double digits. Cannot have any cash cows when you look at your return on your sales is less than double digits. You want your returns to always give you a minimum of double digits. So track that number passionately. The second one, you want to track your overheads to revenue or your overheads to sales. Now let's go back to the concept of cash cows. You need not need to invest a lot of money in a cash cow product and or service or a company or part of your organization. So you want to make sure that your overheads to sales or overheads to turnover is the opposite of your return to sales, are kept to the absolute minimum. The minute you need to invest more in your cash cow product or service, then something is very wrong. So that's the second number. The third number, look at or track your quick ratio. I would even said rather track your cash ratio, but not very many people operate on cash-based business. So track your quick ratio where you should not be keeping any inventory. So you want to do away with your inventory and you want a quick ratio. My opinion is always saying you need a quick ratio of 2. As a matter of fact, 2 and above for your cash cow product or your cash cow line. The third number and the fourth one, I want to combine them. The first one is your debtors date and your creditors days. You need to collect cash quicker than you pay your creditors. So for an example, if you pay your creditors in 12 days, you need to collect your cash in 1 day. So by the time you pay your creditors, you actually pay them with the cash of the 11th day and you keep in the 10 days before. And the last number, two, not last. Depending on what you want to use as your cash tracking mechanism, if it's because remember your cash cow is either you're cashing sales or you're cashing your earnings or you're cashing your dividends, which technically speaking, if you are in a dividend yielding entity, your dividends becomes your cash flow. You're investing in that future cash flow. So you want to look at what is the dividend cover if you are in an organization that is paying dividends, if you're not only looking at your small organization. Put it different, even in your small organizations, you need to make provision for, say, out of the earnings that I'm generating, if for every R1, I am generating 20 cents with retained earnings, how much of that 20 cents I'm going to retain as dividend? what cash flow from the 20 cents am I going to retain? So again, as I'm saying, and what is the dividend cover that you must be looking for? From where I'm standing up, again, like the quick ratio, I'm comfortable with a number of 2. Why? Because this is a cash cow industry. This is a cash cow product. This is a cash cow service. I'm not supposed to be having a return ratio that is minimal, because the investment should be dealt with the sunk cost. And lastly, and this maybe only applies to listed organizations, your price earnings ratio. Don't ever invest in any organization that is giving you a price earnings ratio of less than 10. It's useless in my mind. You need to be, well, all I want to say, if it's a cash cow product or portion, I need to enjoy the minimum of 10 years of revenues today, because that's what price earnings ratio. The earnings that I'm enjoying today is how far in the future I should otherwise be enjoying them. Yeah, also, I just wanted to put some more flesh in some of the numbers that I usually track as far as the cash cow industry and or organization or a product are concerned. Yeah.
Okay, I want to ask a question. With the way that everyone's pivoting, people that have started up businesses from nothing because they've had to, there's been a lot of talk about the fact that there's been a lot of entrepreneurs that have surfaced. But what advice would you give to those entrepreneurs that don't have a budget to work with at this point? They're basically starting out with nothing. They don't have finance that's been given to them. They're literally working from hand to mouth to try and build this, but they're not even drawing incomes yet because they're not generating enough. Because I think a lot of people are in that boat right now where they're starting up with something brand new and they're wanting to earn money, but they need to try with the bare minimum that they can to be able to start growing their business. What advice would you give to them?
Can I go?
First? Yes, Linda.
Can I go? Okay, so I come across this like all the time. Ever since I started this business, I didn't think I was going to work with startup entrepreneurs, but you don't have a choice. You work with startup entrepreneurs because they come to you saying, how can I make that work? Exactly your question, Karen. So this is how I usually go about it. The very first thing I do is ask a number of questions. What is it that you want to achieve? What are your values in life? What have you tried so far? What are the costs? And often this is a bit of a tricky one because they're saying, oh, I want to price it at 10 Rand or 100 Rand or 1,000 Rand or 10,000 Rand. I said, but hang on a second. You can't determine the price until you first determine how much it's going to cost you to either create the product or to generate the service. So what are those costs? And we sit down very, very simply, very systematically just saying, are you going to work from home? Are you going to have an office? Will you have rent? Will you have data costs? Yes, no, what is that amount? Next, are you going to be taking buying something and then converting it into something else? Maybe you buy mugs and then you design something on them and then you sell the designed mugs. So how much is the mug going to cost you? How much is the printer going to cost you? How much is the ink going to cost you? How much is the marketing going to cost you? Have you even thought about marketing? Yes, well, no, I don't know. Maybe I'll put an ad out. Maybe I'll join a networking group. Maybe I'll join BNI. So fair enough, there's lots of different ways you can market, but what's your market? First of all, is it the community just around where you live? Is it the whole of South Africa? Is it the whole of the world? And so you see, it's not that simple, guys. It does take a session with an advisor or a coach, or it might be a father figure. It might be someone who's been in business. But it really, my first point is to say, figure out a few things first. I get that you've got this new idea. Yeah, let's say it's doing masks, for example. It's like quick. It's something that I can make a lot of money of quickly. Personally, I don't believe in the quick buck at all. Just as far as I'm concerned, it really doesn't exist. And if it does, it won't last very long. So if you're in for a quick buck, go for it. If you're trying to build a business that will survive, that will generate the freedom that you're looking for, to travel, to pay for your kids' school, to buy shoes, for example, whatever, then be serious about it. And if you're going to be serious about this business, then start that way. Sit down with somebody, anybody. I'm not saying it's me. It could be me, Stephen. It could be an accountant. It could be a fellow entrepreneur. It could be a father-in-law, just someone has some understanding of business, and let them ask you questions. You may not have all the answers. I've worked with some people that don't have the answers, and I say, it's fine. Go away, take the time to find the answers, and then come back to me. And then let's try and work out how much money you need to get this business off the ground. And if you have it, cool, like a retrenchment package or something. If you don't, how are you going to start small so that you can invest a little bit, get the return, invest a bit more, get a bigger return, invest a bit more, get a bigger return. So is it something that you have access to funding? If you do, that's wonderful and marvelous. But don't just invest it and lose it in 6 months. Make sure you understand what you're going to do with that money. And the best way I can advise is to sit down, literally. And I know some people aren't like me and Stephen, we all structured and forms and planning and goal setting and all that sort of stuff, Peter. But I promise you, it's actually important to take some time right at the beginning of your journey to pack well. And to pack your bag, if you want to go on a journey, if you want to have adventure, if you want to experience joy and success, then pack well in the beginning. Otherwise, it can be absolute disaster and you will be crying most of the time. I hope my way of explaining things in a very non-professional way or banker way has helped some people get why it's so important to start right so that you can develop a sustainable business, and that sustainable business in time will generate that cash that will allow you the freedom to do whatever you want, to invest in more businesses. Isn't that what we all want? Yeah.
Very valuable advice. I wish I'd done that in the beginning, actually, because I wasted a lot of money pouring it out there, not measuring the return on investment I was getting. And I think that, like you said, pack well, test your return on investment with everything that you're doing so that you not keep on going in different. So thank you for that. That's
Brilliant
great advice.
Yeah, and guys, you don't need money to start a business. That's what Linda was saying now as well. Like, you really don't. You just need to be smart about it. And then you build up that process, like she said, and it starts generating you cash, and the cash starts generating more cash. And that is the worst thing you can do is when you're starting up as an entrepreneur, go like, okay, so I have these funds. I'm just going to throw money at this problem and I'm going to have a business. Won't work. So thank you so much, Linda, for unpacking that. Was so valuable. I'm going to ask Stephen Westwood. It looks like you've been having something to say for a really long time. And then Stephen Levy, I'm going to pull you up on screen as well. So just go for it. Draw the value out of this panel.
I
Okay.
can add something once the two Stephens are done as well. That would be great.
Do you want to go first, Tzippy?
No, I want to hear what you have to say.
Okay. Linda, that was phenomenal. That, the way you clearly outlined that, it is worth celebrating, because you're right. I just wanted to add, there is a lot of information out there at the moment for people starting a new business, particularly in the digital space, where they promise you these phenomenal results with very little effort. It does take time. It does take work. And the key to a sustainable business is to not cut corners. Make sure that you put in that time and effort, particularly at the start. If you have a solid foundation, you can build from that. You can grow from that. If your foundation is rocky, it's going to fall. But yeah, that's basically just something I just wanted to add to what Linda said. I have got some questions, but I want to wait a little bit, if that's okay.
No problem. Okay, Tzippy, you have the floor.
Thanks, Stephen Levy, for letting me go in between the two Steves. I feel like a sandwich. Okay, so Linda, what you've said is phenomenal. In fact, all people starting out should go talk to you. You speak so clearly and so on the ground, like it's just brilliant. I just want to add two things. The first thing is just because you are not starting your business, for those of you who are already in your business, don't get daunted that you didn't do this at the beginning. Today is the first day of the rest of your life. So pretend that today you're starting. Take that information that Linda just said and apply it from today. Pretend that you are going to reinvigorate your business from today. And if today is too crazy because it's the last day of the month, do it on Sunday. And take some time out and just stop and say, where am I? Look at what you've spent so far and what you need to continue your business. And sometimes you're going to have to make difficult decisions. Sometimes you're going to have to say, you know, the mics with the pictures on are not working, but the purses with the pictures on are working. So maybe I need to stop my mics and continue with my purses. So don't be scared to look back and to make those decisions. For those people who are saying, and I've had these discussions recently, but I don't have the money to continue. I can't pay my, you know, maybe I'm in the wrong business. You know, have a look at those numbers, because sometimes it takes time for that to actually become cash. We all need money to live on, and that is something very important to note. But sometimes the building of your business is going to take a lot more. So that return on investment that you're getting, it might not be proper cash yet, but I do believe that what Dr. Meiya said, and I wrote it down, of getting to the PE ratio of more than 10. It will come as long as you're making the right decisions. And in order to make those right decisions, there's one more thing you need to do. You need to take a daily account of your bank, of your money that has come in and the money that's gone out. I have a client, he today must be in his 80s. When he was active in his business, okay, if I told him that his profit was 100,000 Rand, he would say, no, you're wrong. It's 100,002 Rand and 45 cents. He knew to the cent how much his profit is. Now, I'm not saying that everybody needs to do that. I like rounding. I'm that kind of person, you know. So if you're the person who needs to know the cents, go ahead. Make sure that you know what your sense is. But if you're a rounder upper or a rounder downer, either of those two, make sure that you know what ball game you're in on every single day. Because if you know on a daily basis, then you can make those decisions. If you don't, and you can thrive. And if you don't know what it is, then you're going to make the wrong decisions. Well, you're not definitely going to make the wrong decisions, but you're likely to make the wrong decisions, or you might be likely to not actually commit to invest. And that's I think that is very, very important to note. And on one more thing before the next Stephen goes, I'm making this a thick Stephen sandwich because, you know, I'm the thick fella. Claire, who is on the panel, who is one of our participants, made a very good comment earlier. She said, in South Africa, now I have to find it, there's an organization called CEDA, which helps with a business plan to apply for funding. And then the NYDA offers 50,000 Rand in startup equipment. So that's just one little thing that you could note if you're starting up a business. There are organizations out there that will help you. It's just a matter of knowing who to speak to, and Google's a great friend, but otherwise reaching out to anybody on this panel or anybody in this Facebook group will be able to give that kind of advice and set you on the right way. And I'm done for this second.
Epic! Thank you, Tzippy. That was a ton of value. Shall we hear from our second Stephen for the session?
Everybody, okay, so I'm just going to say, first of all, wow, it's awesome listening to the three of you. There is just so much valuable information that you've all given, and I hope that those entrepreneurs that are listening are really writing this down or taking note of what everybody said. So if they haven't, I'm going to probably just recap some of the things that stood out for me. The one is, you know, I think as entrepreneurs, they go in with a product, and that's where their strength lies. And then they need to recognize that they do need, I think the first thing they need to take on is an advisor. because their cash needs to be managed correctly. And you see so many times entrepreneurs, as soon as they start making money, and understandably so, I'm not knocking them, is that they start using the money themselves. They have to invest money back into their business for quite a long period of time, and they need to understand this. And I think what Linda was saying, to sum up, is just make sure your foundation's strong, because there's no business in the world that has 12 months a year, good months a year. There will be bad months. So as an entrepreneur, you've got to be willing to make the sacrifices. In terms of the cash cows, recognize which of your products or services are your bread and butter lines, and then recognize and keep those, sustain those, because put it back into your business and have as little debt as possible. Debt can be a killer, especially in the bad months. There's some necessary debt that you need, and it can be a killer. So this is what I'm taking. This is what I'm taking out of what I heard earlier, and diversity of product, especially today. We need to be diverse because things are changing so often. And one industry that comes to mind is the events industry. We've got people now in the events industry that are using their transport that they use to transport all their things to different events. They're now offering it to people who are looking to move home, and so on. So diversity, without a doubt. And another thing, as Tzippy was speaking about your taxes and opening your call account I think a lot of entrepreneurs, they use their VAT as cash flow, and that money doesn't belong to them. I think it's so dangerous. So yeah, that's it. And I think the advisor, surround yourself with a team. It's not always possible to do it all at once. And Linda said that, build it up slowly. But get the advisors in that you need. The first one is maybe the people like Tzippy who can help you manage your cash flow. You can get people like Linda on the business coaching side to help you through your journey and strategize it. And you can't bring in everything at once. Build it up slowly and then prioritize what you need to bring in when. And so the business will go. You're in the business, I hope, as an entrepreneur, not to retire starting it today and to retire in June, because certainly not this June. You're not going to retire this June. And if that's the reason you think you're going into...
Unless you join the Explore ProTech Tribe, Stephen, right, then you can retire this June.
Yeah. I was just about to give Explore ProTech a punt, but I'm not going to now. But if you listen, Nestine could probably fast track that for you, but you just make sure you got a parachute. No, so yeah, those are just the takeouts that I had, and also from my own experience. When I started my business 16 years ago, it's just really that first year is tough. It really is. You've got to be prepared to invest back into your business, not yourself. If you're going to put yourself above your business, that's the only thing that's going to remain is yourself.
So no shoes, Stephen.
No, you can get shoes. Start off with slip-flops.
Slip-flops, yeah, or slippers. Yeah.
Slippers, yeah. So yeah, so thanks guys. It was just, I've got some questions, but I'll save them for later.
Awesome. I'd actually like to agree with Stephen Levy. Moving into a new space of doing business as entrepreneurs, obviously a lot of people are moving online. A lot of people are moving into a space where they are now have the ability to build relationships and to network. Rely on those relationships. And if you are in business and there is something that we've spoken about today that maybe is not your specialty, maybe finances is not your strong point, maybe it's something you don't even want to do, but you still need those services, then the online space is a perfect space for you to be, because you can reach out to an accountant, you can reach out to a business coach, you can reach out to any aspect of your business that you need assistance in. If it's not your strong point and it's not something you want to do but it needs doing, then do yourself and your business a favor and reach out, whether it's marketing, whether it's finance, whether it's written content, whether it doesn't matter what it is. There are professionals that can be networked with to stand by your side. We are not in business alone anymore. So just keep that in mind. Run with it.
Peter, can I say something on that just while you're there? Now I'm going to give Explore ProTech a plug. Okay.
Stephen, the whole point of a plug is you don't announce it before you say it.
Nah, they know, man. There's no crap here. They know, man. It's if you want to surround yourself with those experts that Peter's referring to and that the panelists referred to earlier, then join Explore ProTech, because Explore ProTech has all those people available to you if you sign up as a member to Explore ProTech. And I'm serious, that's jokes aside. So it's not really a plug, that's the fact. If they're not sure, they can join and find out.
Thank you, Stephen. And Stephen will know because he's one of our people. So is Linda, so is Tzippy, so is other Stephen, and so is Mr. Sales and Dr. Meiya. Meiya. On that note, Mr. Sales, you said you have a question for the panel.
Yeah, thank you, Nestine. So how often, Linda, you mentioned about the numbers, and then Meiya, you also brought up which numbers we should be paying attention to. How often should we be tracking these numbers? Is once a month enough? Like some people I know do it daily, in terms of tracking the in and out of money. Could you give me some insight in that?
I'll take that one. I'm going to answer it as an abstract first. In my mind, you need 3 dashboards. The first one that you need as an entrepreneur, as a business person, is your strategy dashboard. Then the second one in my mind will be your personal finance dashboard and your business dashboard. Now, I'm starting at an abstract level to say, when you look at your cash flow, Marlon, you might want to be, depending on the product that you're driving, there are products that you want to track literally on a weekly basis, but on your dashboard, you want to have a high-level monthly picture of what's happening. That's from your sales. And my colleagues also mentioned, remember, at some point in time, and all the time actually, you also need to invest. So you also need to be able to track at least monthly the expenditure or investment, in the lack of a better word, that you're having. So you will have some lines or some products that you want to monitor on weekly basis. You want to work on the business, not in the business. You're probably not going to have enough time to sit every day tracking the numbers, because the numbers are a byproduct of the work that we do as entrepreneurs in building organizations. So I will argue or suggest that at worst, a week for some of these things should be sufficient, but definitely a month. The last thing you don't want to do is to wait until a quarter of a year only to find that the investment that you've been making, you've been losing money. Secondly, if you look at your strategy dashboard, you don't want to wait until 6 months or 3 months down the line to realize that what you thought was going to work for this year, it's actually not working. And as a matter of fact, as entrepreneurs, we all know at some point in time, you will lose some money, not intentionally. So you want to be able to pick up these losses early to either redirect your entrepreneurial strategy, or that could be to reinvest, to change your products, or cut your losses and move on. Long question, long answer to a short question, but Marlon, I'm not able to say it depends on what particular item you want to pay attention to, but that's what I'll give abstractly.
Dr. Meiya is 100%, I think, in terms of those tracking sheets, whether they're spreadsheets or journals or random pieces of paper or something on your wall, you know, you get to choose. But I wanted to share a quote. It's a very simple one from Tom Boardman. Some of you may have heard of him. He was the CEO of Nedbank in the early 90s, late 80s. He was also the CEO of Boardman's Furniture back in the 80s as well, and he's been a board member of many companies like Vodacom and Woolworths. And I'll never forget, he, as the CEO of Nedbank, when I worked there, he always made this statement. He said, what doesn't get measured doesn't get done. And he, you know, it was something that I realized very early on. He was absolutely right, and he implemented those measurements in the bank, but also for monitoring revenues, monitoring product sales, you know, monitoring those returns on investment, monitoring, you know, income per business unit, just everything. And he was 100% correct. What doesn't get measured doesn't get done. We look like, even now today, we're having a bit of fun. We're taking this time out to network and share advice and do something. But like, what is the result of it? You know, Nestine, I presume, would be saying 100 people were watching or 1,000 people were watching. That's measuring it. And how did that compare to last week? And how will it compare to next week? What is your audience reach? That is something that you would measure. So pick your measures. Don't try and measure everything, because like Dr. Meiya said, then you will just be swamped with measuring and doing nothing else. So you either hire yourself someone to do this measuring, or you work out what works best for you. Is it once a week, once a month, but not less than once a month? Definitely agree on that point.
Love that. Thank you so much, Linda.
Awesome.
I think a lot of entrepreneurs tend to kind of view the finances of their business as an admin function, where what it actually is a management function, right? So I think 100%. That has been really beautifully addressed in the panel discussion. Thank you.
I just wanted to say, Nestine, on that point, I think I was having a conversation with a client who felt like it was just such an effortful thing. That's a word from Karen, by the way. I think it's just something really effortful to do from your fascinating 7 programs, Karen. You know, where there are those activities that you just don't feel like doing, and there are many people who don't, and they call it admin. And that word admin, just pick another freaking word, please. Please just call it my business execution measurement or something, and then it'll give it some more importance in your life than admin.
Just don't call it accounting, because people hate accounting more than admin.
As well, yeah.
You know, like
awesome.
I love the concept and the ideas around the dashboard, and I know Meiya is like kind of disappeared for the moment, but what do you guys have? What ideas do you have around creating that? Because I love the idea, especially lately. I track pretty much everything to do with my health. I track everything. I track how much I eat. I track how much of that goes into my body. I'm like super fanatical about it, right? And it's so much easier for me living in these day and age. For example, I'm sure there's a lot of us, which is maybe where our accounting systems, you know, come into play. And because today everything is about integration. So, you know, one thing feeds into the next, which feeds into the next, where we can almost see this in one space or maybe 2 spaces. Do you guys have any ideas or thoughts around what we could do to sort of feed that information correctly on this regular basis, so that it can give us a good enough, clear picture of where we're at and where we're going?
We need an app. I don't know. I think it's a brilliant idea. I don't know any apps, you know, except for the usual accounting software, Zeros and what have you.
I mean, doesn't Zero basically do that?
So Zero's got a few functionalities. They've got a great little business reporting app. In fact, what I'm going to do, if you give me 2 seconds, I will, while I'm talking, I'm going to jump into my demo version of Zero and show you 2 reports that Zero has. But on that note, there are other apps as well that could feed into your, look, you've got to have an accounting package. Now for a startup, accounting packages could be expensive. So it's just something to be aware. Look around for something that works for you. But when it comes to, when you've got like a little bit more money, okay, so just that extra bit of money to invest in a very good accounting package. The ones that have got good functionality, good reporting functionality, and I showed this to people in a course that I did. Stephen Levy, you were in that course, and it just shows you your short-term cash flow goals, your short-term, how much money are you going to be getting in the next 7 days compared to how much money you need to get out in the next 7 days, those kind of things. So it really makes a huge difference. In my demo company, all right, there's a few things that the information is there. Can everybody see my zero? That okay. Inside the business, there are two snapshots that you can see. Okay, the first one is the business snapshot. Okay, so over there you've got your demo company. All right, I want it specifically for the last financial year. Okay, you can see over there your income, your expenses. You've got your top operating expenses. You can see this on a daily basis. Okay, profitability, and then you've got your financial position and cash over there. This is something that Xero created, and they realized during the pandemic that people needed this information quite urgently, so they put it out very, very quickly during COVID last year. And it really has made a huge difference, especially for those people who don't like to see numbers. And there are a lot of people out there, they're business people, they're very good at what they do. They don't like looking at numbers. Numbers are scary for them. So when you see it in the picture way, then that's great. The next thing that you can see is your short-term cash flow. And this is what I was talking about. I'm not sure if this is going to answer the question, Marlon, but I really do believe that that it will help. Okay, so here I'm going to show you a projection. You can see right here, where is your money? Now, obviously, because this is a demo and I don't play with it, so, it's pretty static information. But you can see over here.
Tzippy, this is stunning. Thank you so much for showing it all.
Honestly, this is exactly, this is for someone like me is perfect, because I hate it when my accountants come with all these numbers instead of coming with nice, beautiful pictures, because pictures I understand.
Yes,
so,
exactly. So no, it's a pleasure. So I've got clients like you who are very visual, and if I show them, that balance sheet that people love, that accountants love, they look at me and they say, I don't know what you're talking about. But over here, you can see straight away your projected balance from your invoices and bills. Obviously, you've got to have your information correct. So if you've got, for example, add dates for overdue invoices, you can straight away from this cash flow, you can go in and say, oh, this Ridgeway University is actually going to pay me only in 3 months' time. That is going to change. What is your cash flow thing? If I let that load, this amount changes now because of, this is in dollars, by the way, because the demo is in dollars. So everything changes. You make sure that your information is correct. You look at this, you say, I can understand this. If you look at this on a daily basis or even on a weekly basis, you can make those decisions we were talking about. There are apps out there as well, and I'm in communication with another guy at the moment who is creating an app that speaks to your accounting package. And at 6 o'clock every morning, you will get an email in your inbox with a report of all the important information that you need to know. And it's going to be in this kind of format. So it's pictures and colors and numbers, but not in spreadsheet. I mean, I think you can get the spreadsheet version as well, but it's all like all this kind of thing. And on that, at 6 o'clock that morning, or whatever time it is you're having your morning coffee, at a glance, where am I and where am I going? And I think somebody asked me today if I can stop my share, if I feel as an accountant, if I feel like technology is hampering me. And let me tell you that technology is phenomenal. And it's going to allow us all, as accountants, as business owners, as advisors, to take all our businesses to the next level. And for those of you who think that you can do it on your own, I agree with you 100%, because if you think you can, then you can. But always make sure to have that advisor on the side, because every now and again, there's going to be something that you just need that external person to look at. And if you can tap into these kind of apps, and it doesn't have to be Xero. I love Xero. I use Xero. I get my clients to go onto Xero. I'm sorry to all the other industries out there who want me to use other accounting packages, but this is my package. You know, but find the one that works for you. Find the one that works for your accountant, and search. They've all got integrations with other things, and search for the app that can do what I've just shown you.
And then you can give your business coach like Linda access to that dashboard, and then you're making money.
Exactly.
Guys, this has been so incredible. Tzippy, Linda, Meiya, thank you so much for what you've shared with us today. This was epic. I mean, even for a financial discussion, I think this was very much not boring. It was actually really, really helpful. So thank you so much. And we will see you guys next time. I think next week we are doing something awesome again, maybe on the psychology of marketing, but I'm still arranging that. But we'll see you next week, same time, same place. Panelists, thank you. Facebook fans,
Thank you.
that's how you raise cash cows.
Thank you, guys. Sure.
Bye, everyone. Thank you.